more. All right, got some more Secret Wars. Stan Weinstein special project. And man, the more I get back into it, the more I remember some stuff. And this next little tidbit of information there that I read up on yesterday is the trader's way. So when you refine sell stop orders, in the previous two episodes, the trader's way, I moved up the sell stops under pullbacks with when I had a V. Anyways, we'll go back to it. But what I should have considered is Stan says trader's way, don't move your sell stops for corrections less than 7%. And that kind of makes sense. I went to redid the Alibaba on the previous episode, and I would have at the beginning there was a pullback after the breakout. It wasn't 7%, and I had moved my sell stop up, and we got triggered out. So I'm not going to go through Alibaba again, but if you go back to that episode and you see the first sell stop that I put after the breakout, if you would have put it at 7%, since it was less than 7%, you don't move your sell stop when you do the trader's way. It changes a lot. So this gives more value to the trader's way. It brings it a little closer to the investors, so you increase your chances of not getting whipsawed. So I kind of like that, and we'll see how this applies to this chart, GM. So I have my Stan Weinstein setup right here on my Interactive Brokers, and that's 5 years, weekly candles, 30-week SMA. And man, that 7%, I don't know how Stan did it. Back in the days, they take a calculator and always calculate his high to lows, his pullbacks, and then the correction back up. Because after I read that yesterday, I said, oh my God, I'm not getting, this is like too much stuff, man. I can't calculate 7% each time. It just adds that much more. But behold, studies, and I have a zigzag. There's actually a study called zigzag where you set your percentage change, and then after that it just draws lines. Check it out. Look how nice that is. So right now I get moves if it's 7% or more, then the line is drawn to the close or the high or the low of those candles. So I'm going to start using those to be my final check before I enter the before I move my sell stop around. What do we have here for GM? All right, here, nice stage 2. Stage 3. And there's nothing about stage 3s is on the for the stage 1 to break on stage 2. He always looks for volume. Let me back it up. Wow, look at this nice stage 2. So you need volume, like higher than normal volume. Here you have one candle. So you could have, but yeah, this would have been nice. Breakout above 30-week SMA. And if you didn't play that one, you had an even bigger pattern right here. This one, this candle here. So you had this breakout right here. And this pattern here. This would probably be better. You're above the 30-week moving SMA. You had a substantial move from the low going up. And that's your breakout. So let's just do it. Let's see what would have happened if we applied this new tidbit of information that I didn't have. All right. So right here. Oh, breakout. All right. We have my volume. What's a triple confirmation? Okay, we have high volume right here, more than the usual. Breakout candle above a pattern, horizontal line. We have a 3 moving average. We're above that. The breakout is above the 30-week moving MA, trending upwards, and the RSI is going upwards. Preferably cross over the 0, the 50 line here, the midway point, and now we're above it. It's okay, but it's still going upwards. So right now, what happens? Okay, let's do it. I'll keep doing it trader's way and investor's way to always, until we get a good feel of the advantages and disadvantages of each. They both enter here. Investor's way, sell stop below the pattern. See, if you got greedy, you could have said the pattern was here, right? And you could have put your sell stop right there below here. 1, 2, 3, 4. If not, you could have said this is the bigger pattern. Whether it be an ascending triangle or a rectangle. So let's say this was a pattern. So this is going to be our investor's sell stop. Entry to sell stop. Size it appropriately so you lose less than 1% of your NAV. All right, trader's way. Trader's way, you put the sell stop about 4 to 6% below the breakout line. Here's where you have to pop out your calculator. So right now, if the breakout line is no, let me put it. It's right here. Breakout line's at 26. So if I do 26, and then let's say I take 6%, it gives me 24.40. So my sell stop would be at 24.40 to do right about, well, see, about right here. So it's about where I put it the first time. And below round number. All right, stand round numbers. I don't know if this applies today. This is a book that's written a while back. But for stand, the round numbers are let's say, okay, let's go in reverse order. 22, the round number. 21, 20. But then not 19. Under 20, it would be 19.5, and then 19, then 18.5, and then 18. So if ever you're under 20, you use half steps. If you're above 20, you use the whole round numbers. So right now, 24. And if we want to really protect ourselves, that was 4%. I said I'd put my sell stop right here. About 23.91, 23.95. So now you'd size your entry to bottom. So purchase the amount that you would need for that to pull less than 1% of your NAV. All right, so we're in. Triple confirmation. Check, check, check. And let's move it along. Let's see how we're going to practice selling our sell stops. And I have to get used to the zigzag. Yeah, this is crazy, man, these lines. Can't believe so software today could just do a whole bunch of stuff. And if it's not 7%, the lines will, well, it's kind of drawing in advance. All right, so this is 7% move, but we want to wait also to the for the price action to go up, right? It's just, okay, 7% retrace. Now let's see if the price action goes up. And if it starts going up towards our target, there we go. So now we would have moved our sell stop. First sell stop would have moved it here. RSI also is as a UV. If I would have more candles you have, the U's will become tighter and tighter, and they'll become V's in appearance. And our sell stop would be right under here for the traders, right under here for the investors' way. All right, price action moves up towards, pull back 7%. Is that really 7%? That's, sorry, I don't, let me get my calculator out. What is that? 29.10 times. Yeah, that's pretty much that's 7% what it looks like on that chart. Price action went down and went back up towards the high, previous the high before the pullback. Get the RSI here, V shape. So sell stop, move it up here, and investors wait right there. So right now you see our risk has changed. This used to be 1% of risk of NAV, and now you probably cut down to a third of a percent for the trader's way, and half of a percent. So it's kind of fun, man. You see it stand right away, you start moving up, the trend's in your direction, you're on the power breakout, and you could sleep at night seriously well, because you don't have to worry about losing that much NAV. And then price action goes up, up, up. Oh, there we go. So now we have a retrace. Then we move back up, 7% correction. Move the sell stop, trader's way here, investor's way here. Here's our little V action here on the RSI. And off we go. We're in the profit territory. Pull back. Oh, okay, let's not. Pull back, 7%, 7% correction, move up. There you go. Move up the sell stop here, investor's way here. And keep moving up. Wow, another pullback. Another pullback here. Move the sell stop here. And you see we're getting the investor's way and the trader's way sell stops. Now they're starting to get close, one together. That's a sign that the it's starting to slow down the pattern, and we're maybe starting to enter it's not less aggressive. We're starting to enter maybe a stage 3. There's one thing I forgot to check is if we would have had an aggressive trend line, and I don't think I noticed it with 3 connecting dots. 1, 2, 3. We could have taken half of our position here, right here. So you see I moved too fast. I should have maybe started drawing. And that again, for the stand community out there, what does he mean by aggressive? I know like sometimes having a ascending trend line like that, that's pretty aggressive for me. But if the trend line is at the same rhythm as the moving average, do we use it? Is there a specific angle? 40%, 0%, was that 50? Oh, so I don't know how that. I don't want to get out of the trade too prematurely. So right now, if we use this trend line right here, trader's way or investor's way, trend line and swing rules, you take half your position when it's violated, and you let the remainder half when you hit your target, when you get your sell stop. So in this case, we would have had our sell stop, or you continue playing until you reach your sell stop. Here you wouldn't have reached it, would have bounced back up. So right here would have emptied half of our position right there. If the trend line, I'm using it correctly. I guess I have some more homework to do. All right. And here's the correction. So what happens here? All right. 7% correction. Trader's way. Any violation of the 30-week moving average, you're out. So right here, we would have emptied the remainder half of our position. And if the trend line, we didn't use it, I would have removed 100% of our position. Right there. This candle here. Investor's way. Investor's way, where am I? This was the last time that we said it, was right here. Stretch that out. We're still in. So investor's way, we got rid of half of our position here. If that trend line is considered aggressive trend line, and it was the good place to take it out. 7% correction. Price action starts going back up. Oh, and we're out. I didn't have time to move it up because the price action didn't go back towards the high. So that's maybe another point. Do we have to wait for the price action to really reach the high, the previous high before the pullback, before considering that I have to move my sell stop under it? Or just the fact that you have a few candles and you're in the direction of the previous high, that's enough reason to pull it back up. I've always been on the fence on that one, not quite sure. And I guess that's remembering the question. So I have two questions to be answered. The trend line, how aggressive does it have to be for me to use it? Or any valid 3-point trend line is good enough? And moving up the sell stops, do I have to wait until the price action reaches the previous high for me to move my sell stop up? Or just a few candles? I'd have a tendency I have to wait for it to reach close to the previous highs. That seems to make more sense for me. Either case, we're out. So right now, if I didn't move it, it's just a few more points. Here's my sell stop here. And I didn't move my sell stop up here. And 1, 2, 3, 4, 5 weeks later, we're out. Wow, did I do this right? All right, let's see. And look, this is definite stage 3. So you're able to ride the whole stage 2 of stand. Really well made. And you kind of get to see that the chart has morphed. And this is like a head and shoulders pattern. Left shoulder, top, right. And who knows what's going to happen next. But the important is you're out and you want to be in the stock when it moves fast in your direction. To be right or wrong, if the eventual move went up, I should have stayed in. It doesn't matter. Let it consolidate. Get consolidate for years. You don't want to be stuck in there. Emotional landmines, just going crazy, not sleeping at night. So that's very nice. All right, so let's see. Profit time. And Trader's Way. An investor, half of our position, we took it out here. Right here when the trend line was violated, and the other half of the position for the investor was hit here when all the way back here, because we didn't move our sell stop. Our sell stop was set here, so we kind of stayed in the trade for a long time without moving our sell stop. And the investor's way, the trader's way, the remainder half position was destroyed, was gotten rid of when the 30-week moving average was violated, which is here. So we've seen this case, trader's way had the more profits, and the investor's way has less, which is usually mostly the case, but will have higher chances of not getting whipsawed out. Yeah, so that's about it. And remember, the trader's way, the investor's way, moving sell stops, if we would have had a pullback of 7%, and towards the end of the move, you start moving your sell stops like a trader would. That means you don't put it under the moving average. You would have put it the same place as a trader. So a lot of the stuff, man, that I completely forgot about, and practicing is gonna be good. All right, so here's the risk we had. I'm just gonna add that up. Try to see what my risk to reward ratio would have been. And so what I'm doing now, okay, that's probably half an arrow. I'm just adding the arrow. So one risk for 1, 2, 2.5 rewards maybe, because it's half here, the position, right? So 2.5 rewards for one risk for the trader's way, and the investor sell stop. Oh. We do the arrow. The risk, the initial risk for the investor was this one, this much, and the reward was between those two. So 1 and maybe 1.5. So you risked 1 to win 1.5 of your NAV. Not that bad. There's more aggressive up, but stands is high probability. So even those type of rewards, 2 to 1, 2.5 to 1, or 1.5 to 1. Those are, I think, on the low end. Usually, I've seen mostly 3s and 4 times the risk reward ratio is 1 to 4. But since it's a high probability system, and you're on the good side, then even if you have a 75% success ratio, you're still way in the green. So that's about it. I think I wanted to do a stage 4 breakdown, but I also want to demonstrate the zigzag, and I added it to my default Stan Weinstein profile, because I think this is going to help a lot of me of raising my sell stop and not considering that 7% correction needed for it to be not get whipsawed. See, because usually I was looking at those V's and I was moving up my sell stop, see, down, but I could have gotten whipsawed because that was a correction that wasn't 7%. All right, so let's move on to today, because I want to see what's happening today with so what do we have here? Stage 1. Tried to go for a stage 2. Stage 2 went into a stage 3. But stage 3 right now is mostly like a stage 1. And then it went into a stage 2 right here. And I look at volume. Volume tells a lot. For breakouts, you need volume. For breakdowns, you do not need volume. Fear is the volume. Just the momentum of fear of the humans. You don't need volume for a breakdown. But you need a lot of volume to build confidence and to build up the greed for the momentum to start up. So keep that in consideration. Though there's no volume indicator for breakdowns. Maybe here a little bit more volume than the previous 3 weeks. And above 30-week moving average. Pattern would have been here. Move up. That would have been a nice one. Traders way sell stop here. Get entry here. Investors here. And the traders would be in 4%, 4 to 6% under the breakout line. So let's say it's at 36. Would be 4%. 5% would be $2.30 under round number. Maybe here under the candle. And then would be in the stock. Oh, I love my zigzag lines. See, correction. Started to trend back upwards. Didn't reach back quite to the top. So would I have moved it? Yes or no? Went back down. And then back up. I really have to get some insight into that. So let's say this would have been enough for me to move my sell stop. Trader's way. Investor's way. Move up. Another correction. Then we're out. So right here, the traders were out. Right there. Fully out. Was there an aggressive trend line? It's hard to tell, right? Are these... They're not points. They're just candles. Sometimes I would like a... it's not clear for me. I'll have to figure that out. I'll get back to you guys. So right now would have had sell stop here, triggered out here. So traders completely out. Investors were still in. Correction, move back up. Traders is out. Investors Slowly climbing up the ladder. Going up. Correction. Move back up. Move the sell stop here. And does that bring us to today? Yeah. So investors would have been triggered out right here. If the trend line, I could get some clarity on here, some guidance, then both of the traders and the investors would have taken half a position here at the really aggressive trend line at the top here. And that would be awesome. The trader would have had its remainder half position taken out right here at this candle, because he would have moved his sell stop here. And the investor would have had its remainder half position taken out right here at this candle here. Does that bring us to today? All right. So what do you have here? We have a stage 3, I think, and starting with stage 4. Let me add some alerts. It's already started, I think. I think it started here. Top pattern, price action below 30-week moving average. And RSI, yeah, starting to go down below. So I think this could be the start of a stage 4 for GM. Trader's way, you could wait for a pullback and maybe get back in when it starts going back towards the that price action, or else you could just go in right now and see what's going down. Just maybe a 3-week movement is not flat enough, maybe not going starting to angle down enough, but this is definitely a stage 3 and possibly the start of a stage 4. And because of the RSI, I'd have a tendency to say that this is the stage 4 candle right here, the breakdown candle, going down really fast because of the fear. All right, that was it for GM. And it's all a cycle, guys. Goes up and down, and just want to see what the traders and investors have position, how much risk reward it would have given me. Create 2. Add that up. 2. Add that up. So that seems to be about a 3-to-1 risk to reward. Risk 1 to win 3. Half the position, really fast. Pretty nice, right? Gotta look out for these stage 2 breakouts. All right, I'll get back to GM and keep looking at some more charts. Figure that thing about that trend line and how aggressive it has to be. And I think we'll be ready to go to start selecting some charts and entering with the correct trading framework. And play it out good. Minimize human errors and play out Stan's way, the correct way, or the best as we can, right? All right, guys, that was a long one. See ya!